this is Jordan. This video is being recorded on the early evening of Friday, November 10th, 2023. Hope you all had a great week, even though for precious metals, it was the opposite of that. Let me not beat around the bush. Let me get right into the video, the weekly recap. So starting off, we have gold and silver here. These are daily charts. The weekly charts after this week do look ugly in the short term. Gold was down 3% on the week. I think silver down 4% on the week. So gold, this was last Friday. I mean, you had this white candle with this doji here. And we talked about it last week, how there was quite a bit of distribution around 2000. So there's a lot of profit taking, a lot of distribution. You could tell by these candles how there were closes, here and here and even here. All these closes where, yes, the market was higher on the day, but it closed well off the highs. That's always a signal of distribution and that there's heavy selling into the strength. And, of course, you have these black candles as well, which are also distribution and selling. So, gold losing 1990, bit of a mini breakdown here. This Tuesday, there was a gap down, and that was never filled. So there's a gap here. Then you had a reprieve on Thursday, and the reprieve itself just completely out the window today on Friday. So I think in the last video, we were looking at levels around 1965, 1940 if it got down that far. So 1965, we can see that, that's going to be a resistance level in the short term now that it's no longer support. And then we can also mention 1955. So on any rebound, look for 1955 to 1965 to be resistance. But then where might gold bottom here in the short term? Well, I think if you look at the weekly and monthly, there is some support right here. Also, obviously shows up on the daily. So just above 1900, call it 1910, around that area. So if gold is going to come down and hit that in the next few days, look for a rebound. And so looking at a potential rebound from around 1910 right here, that's going to be the resistance on any rebound. Looking further out, if there's more selling and more weakness, if gold breaks below here, 1900, then you can see the mid 1800s again, where there's a lot of support. But we'll get into that in the next few weeks. But for here and now, I would guess probably going to see a short-term bottom here around 1910, 1915. Now, silver, this is ugly now. We talked about it last week. You had all these tests of the 200-day, multiple here. And again, before this week, we could even say, this looks like a potential bull flag, although it's coming off a bottom, so it's not a perfect pattern. But we did mention, if silver goes below 2250, then it's then it will go lower here. So, this is still bearish. You have this decline here, and then this sideways move looks like a bearish consolidation. You had the break here. You could call it a false break, but still, this is silver's breaking. It's broken this support, so it's breaking down. Probably going to test this area just below 21. And look, if we're getting into if the macro is moving more towards recession from inflation, you're going to see silver underperform gold in that environment. And look, precious metals to begin this new bull cycle and a new secular bull and cyclical bull and a new real bull market in gold, we need that to happen, quite frankly. We need a recession, and so therefore silver is going to underperform gold until gold breaks above 2100 in that scenario. Silver doesn't do well in recessions. So that's just all I'm saying is that if this move lower in silver is due to the market is starting to sniff out a recession, and gold starts outperforming more things, including silver, that's fine. That's moving us in the right direction. So those are my 2 cents on silver, amidst other thoughts. But getting into the miners, so we had the pattern failed. Here you have looks like a head and shoulders bottom. It just completely failed. So close at 27.25. There's some support at these two blue lines. Good candle. I know it's hard to see. Kind of a bullish candle here today in GDX. So I don't know. Maybe a little rally and then, down to this level and you get more of a rally at that point. Looking at GDXJ, fail at the 200-day here. I mean, not almost at the 200-day fail. So, I mean, there's, again, last week it was looking like we had these bullish patterns. And if gold could buck its, distribution around 2000 and, have one last pop, maybe these bullish patterns would have played out. But unfortunately, at this point, they're not playing out. And so we have to target lower levels in the short term for the miners. SILJ, the silver juniors, this is a level of support. It's a pretty good bullish candle. So you could see a little bit of a bounce here. But, that's the reality, is that we're probably looking at some more selling in precious metals. But it's just the reality is this sector really needs gold to go to 2100 and go above 2100. And the sooner that happens, the sooner everything is going to turn around. And unfortunately, while we're moving closer to that point, every day and week and month that we're not there, that's more pain for investors in the industry. So biding its time precious metals biding their time is not necessarily a good thing. It needs to happen sooner rather than later. Let me know what you think in the comments. I'll continue to follow it and do all these videos. I do think gold is primed for that breakout sooner rather than later, as I said. But, in the immediate next few days and weeks, I mean, it looks like the trend is going to be down. So we'll see where gold holds moving forward. Focus on that 1910 support around there. That's all. Let me know what you think in the comments. Talk to you guys again in the next video.